Hiring your spouse in your business can literally save you thousands of dollars in taxes. By simply associating your partner with your business, you may be able to write off more meals, more travel, more car expenses, home expenses, and much more under the right set of circumstances. Then on top of that, if you are big for saving for things like retirement, then you can set up retirement benefits for your spouse as well through your business, which would allow you to save way more money in taxes. You can add your spouse as an employee, board member, independent contractor, or even add him or her as an owner in your company to associate them with your business. And if that sounds too overwhelming, don't worry. I am a licensed CPA and I am going to simplify this entire process for you in this video. I help people do this all the time at mycpacoach.com, and now I am going to walk you through this process in hopes that it will help you save a ton of money as well. So go ahead and save this video and let's dive right in. All right, so as a business owner, you can write off all ordinary and necessary expenses that you incur to operate your trade or business, which can include some of your personal expenses as long as those expenses have a business connection. And by connecting your spouse to your business, you may be able to write off twice as much of those expenses. So let's walk through this first by looking at a few specific tax deductions that can really help you out. Let's start with meals. If you and your spouse go to a restaurant, talk about business, and she is not a business contact, then you cannot write off the meal. So if you spent $10,000 on meals last year, you would not be able to write off any of it under your business. The business meals deduction requires a business contact to be present at the meal in order for it to be tax deductible. So in the same scenario, if your spouse was a business contact and you spent the same $10,000 on meals, then the expense would then qualify for the business meals deduction. But how about other things? How about vacations? Maybe you and your spouse went to Hawaii, Las Vegas, New York, Miami, or whatever location you have in your mind right now. Well, both of your flights, hotel, transportation costs, and meals would not be deductible if there is not a business purpose for the travel in the first place. But let's say there is a business purpose. Maybe you are attending a business conference, seminar, or meeting with a potential client. Well, in that case, your travel expenses will be tax deductible, but if you brought your spouse with you, their expenses would not be. If your spouse is not involved with your business, then you cannot deduct your spouse's expenses. But if your spouse is associated with your business, now all of a sudden you are traveling with a business contact. And in that case, their expenses can be tax deductible as long as they are participating in the business activity as well during your travel. Plus, to add to this, you will also have more room to create a business purpose for you and your spouse's travel. For instance, if your spouse is on your board, you all can plan a board meeting at a travel destination where you make strategic plans for your business, and that may make your travel tax deductible. Anyway, let's move on to bigger things like your home expenses. So none of your home expenses are tax deductible if you do not use any portion of your home to conduct your business. But if you do have space in your home that is solely used for a business purpose, like an office, then you can write off a portion of all of your home expenses. So let's say you rent a 3-bedroom home and you use 1 bedroom in the home as an office space, which we'll say takes up 15% of your entire home. Well, in that case, 15% of all of your home expenses may be deducted under the home office deduction. But then let's say there is another room in your home that your spouse can exclusively use for your business. Well, if she is not a part of your business, then it does you no good. But if she is, and her office is the same size of yours, you could literally double the amount of your entire home office deduction. So instead of writing off 15% of all of your home expenses, you may be able to write off 30% by simply including your spouse and their workspace in your tax deduction. So as you can see, you can literally write off more of the things you already pay for by simply incorporating your spouse in your business. Some of our clients are able to write off even more things like their spouse's cars, insurance, and more by simply adding their spouse to their business. And I'll give you some ways to do this, but first, let's talk about another huge tax benefit that a lot of people miss, which are retirement contributions. So using retirement plans is one of the best ways to save on taxes. And when you add your spouse to your business, you can get twice as much tax benefits. Some of our clients save north of $30,000 in taxes from this alone. So as of 2024, business owners can get up to $69,000 into a solo 401k or SEP IRA plan. And if you're over the age of 50, you can get up to $76,500. And when you add your spouse to your business, you can get twice as much in, which means you could get up to $138,000 or $153,000 if you're both over the age of 50. And this does not even account for things like pensions, cash balance plans, and other types of retirement plans that could literally allow you to put anywhere from $300,000 to $600,000 more aside for retirement in 1 year with the inclusion of a spouse. Now, obviously, how much you can actually put into these plans depends on your income. But my point here is simple. You can get twice as much in by simply adding your spouse to your business. So by now, I think you get the point. Associating your spouse with your business can tremendously increase your tax write-offs, which means lower taxes paid to Uncle Sam. But how exactly should you associate your spouse with your business? Should she be added on as an employee or an owner in your business? Let's go ahead and discuss both options, starting with adding your spouse as a business partner. So the benefits of adding your spouse as a partner in your business is that it eliminates the need for employment contracts, payroll services, and not to mention payroll taxes, which can be very expensive to say the least. In addition to that, this option may also provide the most flexibility for the type of tasks your spouse may be responsible for in the business. Business owners wear a lot of hats, and your spouse being a partner may justify them being involved in various business activities. So in order to do this, you can amend your articles of incorporation with the state, update the IRS, and add your spouse as a partner on your next tax return. Though in some cases, it may be best to add your spouse as an employee. And if you own an S corporation or a C corporation, this may be the easiest option since owners of those types of companies have to be put on payroll anyway. So when you hire your spouse as an employee, you basically have to put them on payroll. And in order to do this, you will have to use a payroll provider like Gusto or ADP, for example, and hire your spouse as a W-2 employee. And by the way, if you're trying to do this on your own, just check out my description for some discount links to these payroll providers because I use them all the time. Anyway, if you hire your spouse as an employee, then they must provide actual services to your company in exchange for compensation. And ideally, there is a job description for those tasks at a minimum that specifies the types of services your spouse provides to the company as an employee. If you enjoyed this video, please help me out by clicking the like button below and be sure to subscribe for even more ways to save money in taxes. By the way, if you need immediate tax assistance, like right now, go ahead and apply to work with one of my CPAs today at mycpacoach.com.